Hello, hello. Uh,
Hey.
Anthony just messaged me to say he was finishing up a call. Will be joining us shortly.
All right, great.
I think this is a cool way to catch up. I'm looking forward to doing more of these with Sovryn. This is a pretty cool inaugural one.
Yeah, the next generation, as I was just mentioning to people before you joined, that was a cool idea for a name. Also, right in line with what Sovryn's trying to accomplish.
So, Exod, what do you think the things that we're going to be covering today?
Well, I think there's 5 main points that I'd like to cover. One is what makes Bitcoin DeFi different would be the first one. What's going on in Bitcoin DeFi. Then I'd like to move on to talking about what Sovryn is for people that are not familiar with it, and also maybe a little bit more granular discussion about what's going on with our September roadmap for people who are familiar with Sovryn. I'd also like to hear your and Pomp's thoughts on what the opportunity for Sovryn is. And then I guess towards the end, then we'll move on to the updates on what's going on with Sovryn in our September roadmap. And then after that, I'd like to introduce our special guest, Shane Molidor from AscendEX, formerly BitMax, is what I've got on the agenda for the call today.
Super cool. Awesome.
Hopefully we can get through all of that in an hour. It's a lot to cover.
We'll talk fast.
Yeah. But I guess maybe we could just go ahead and start with one of the points. It would be, I guess, why don't you go ahead and talk about what Sovryn is from your point of view as a core contributor?
Absolutely. So, I've been getting more and more excited about Bitcoin than I've been for a long, long time. And I think the reason is Bitcoin is very, very special. In the entire crypto space, there's a whole bunch of different assets. Right? We've got stable coins, we've got NFTs, we've got like layer one altcoins or utility coins. And so most people seem to bucket all of these into one category. If you go to CoinMarketCap, everything is on the same page. They're all treated exactly the same way. And even people who are a little bit more nuanced, a little bit more sophisticated, they treat Bitcoin as, competing with Ethereum or competing with, I don't know, Cardano. And I don't think this could be further from the truth. I think if you start looking at the space with nuance, you start to realize that there are a whole bunch of different things being built out. NFTs are very, very exciting. Stablecoins provide an entirely new way of transacting with fiat, although most of them basically remain fiat. But Bitcoin isn't competing with it, right? So Ethereum is competing with Solana, is competing with Avalanche. All of those are smart contract platforms. And as smart contract platforms, they represent technology, right? And technology changes all the time. Technology evolves. You keep on having to update technology. When Solana goes down, then you need to update Solana to get it to start working again. But Bitcoin is different. Bitcoin is not software at all. Bitcoin is something new, something we've never seen before. It's a system which isn't designed to change, but is written in code. It's a system which is designed to be permanent and reliable. I call it sometimes permaware, the world's first permaware. You know it's going to be the same thing today as it was yesterday, as it will be tomorrow and will be for your grandchildren. So I think that's something very, very precious. But it has to remain limited. It can't do everything. If we try to make our systems do everything, they become technology. They become software, not permaware. And so at the same time, we don't want to give up on building more and more ways to eliminate intermediaries who have control of over our lives and represent security holes. And so for a long time, it's felt like, well, you've got Bitcoin and it's this store of value, and that's all it is. And then you've got all of these other smart contract platforms. But Bitcoin was designed so that you can build on top of it. And Sovryn's goal is to provide an extension to the Bitcoin ecosystem, allowing you to build decentralized financial tools, a decentralized economic system, and ultimately an entire operating system for sovereignty, for smart contracts, which can rest on the most solid, unchanging foundations, can do everything that we want technology to do, but not have to change the core of this unchanging system, which is supposed to be like a law of nature, block after block after block, unstoppable, unchangeable, incorruptible Bitcoin. So what Sovryn is it's an extension of Bitcoin, allowing for smart contracts. It uses a Bitcoin peg currently with rootstock, but is integrating with all parts of the Bitcoin layer 2 ecosystem. So that's, for example, Lightning or RGB or Stacks, to provide ways for people to use their Bitcoin without intermediaries and to remain self-sovereign in all of their dealings. So that's what Sovryn is. It's an extension of the idea of self-sovereignty that Bitcoin provides us without having to change Bitcoin, but also allowing you to introduce all of the technologies that are built anywhere else. Any good idea can be introduced to Bitcoin via different layer 2 systems, and Sovryn is designed to make that easy and to connect all of those systems. So Sovryn is the self-sovereign extension that I want to use when I'm using Bitcoin.
So that's a great high-level thing. Why don't you speak a little bit about the DeFi platform itself, the reference implementation that people are familiar with at live.sovryn.app.
Right. So Sovryn is a very young project, and where the
Edan, you're muted.
Oh, sorry. Thank you. So Bitcoin, so Sovryn is a young project. Its development started about a year ago. It's been live for about 4, maybe 5 months now. And the community and the devs have focused on those things where it was obvious that Bitcoin could be used and that people wanted to use their Bitcoin without intermediaries. So right now on Sovryn, you can borrow and lend your Bitcoin. You can trade, you can margin trade, you can create Bitcoin-backed stablecoins. You can launch new projects. You can create tokens that are backed by Bitcoin proof of work to create new communities, to fund new projects to develop the Bitcoin ecosystem further. A lot of what Sovryn is doing is taking the best ideas from the DeFi space that we see around us and implementing them for Bitcoin. And as a result, in a very short space of time, it's managed to become, I think, the most feature-rich, feature-full DeFi system anywhere.
So I've seen people mention that it combines the functionality of Aave, Uniswap, and MakerDAO all in one application.
Yes. So one of the advantages of Sovryn is that Sovryn has, I think of what we're doing as like being, instead of Bitcoin maxis, Bitcoin mutants, right? So for the longest time, especially up until around 2014, 2015, before the block size wars, one of the strongest memes in Bitcoin was that anything that was useful to Bitcoin would simply be adopted by Bitcoin. And Aurora and some of the other early devs, Aurora, she published, I think it was in September of last year, a manifesto. And she said, look, what we're going to do is we're going to look at what's being developed in other places. We're going to learn from their mistakes. We're going to gather their best ideas, and we're going to implement them for Bitcoin. And so I think one of the cool advantages that Sovryn has is the ability to take these ideas, but avoid many of the issues, right? One of the issues is, if you look at the rest of the ecosystem, it is highly fragmented, highly interrelated, and interdependent. But as a result, systems are have a high degree of systemic risk to each other, right? So people borrow on Aave, and then they'll go to Compound and borrow some more, and they're using fiat-backed stable coins to do this. And so the entire system builds up layer after layer of systemic risk, and at the same time, it's more difficult for users to navigate and more complicated to understand. And so with Sovryn, you have a vertically integrated system. It does what Aave does. It provides borrowing and lending and even flash loans. It does what Uniswap does. It provides for an AMM, which allows for trading. It combines these two and allows for margin trading, which is something like a project like, for example, BZX does. And it also has Bitcoin-backed stablecoins, which means that you now never need to sell your Bitcoin ever again, because you can get fiat liquidity collateralized with your Bitcoin, which is what MakerDAO does. Now, this is a really young ecosystem, and so it's it's growing fast, but it's still very small and young in comparison to these systems around it. And so I think there'll be that advantage of being able to take the learnings from other systems and introduce them. And I think
I see that Pomp has joined us, Edan.
Oh, awesome! Hi, Anthony.
Hey everyone, how are you guys?
Awesome, great. We're just getting started, waiting for you to get off your call. Busy schedule. Thanks for joining us. I had Edan cover what Sovryn was, what Sovryn is basically. Let me just before it is that I invite you to join the conversation, Pomp. Let me mention to the rest of the people that are on the call that we're not accepting requests to speak until later in the spaces. This is going to be primarily a discussion between Pomp and Yago. And then we're going to be introducing Shane Molidor later from AscendEX, and then we'll get to involving people in the conversation. Thanks for joining, Pomp. What do you think is going on in Bitcoin DeFi at the moment, in addition to Sovryn? How does the landscape look to you from your point of view?
Yeah, I mean, it's a pretty broad question. What I would say is, first, the entire idea of decentralized finance, I think most people have kind of lost the plot. It's become more of a marketing term than it has technical architecture like description. If you think about, decentralized financial services, Bitcoin is the first and so far the most valuable kind of application within that realm. Doesn't mean it'll be the only one. Doesn't mean there won't be others. But as of today, that is true. What ultimately I think is kind of the framework that I've used to think about this is, on one side of the spectrum, you have Bitcoin, the decentralized digital currency that is supported by and reliant on centralized infrastructure. So the exchanges, wallet providers, etc. On the other side of the spectrum, you have decentralized infrastructure, but you have essentially some level of centralization and also unsound money in whether it's ETH or other smart contract platforms. And so the reason why I think I'm so bullish on Bitcoin decentralized financial services is you're going to bring those two things together. And how do you bring those two things together? One, you're going to either bring Bitcoin to smart contract platforms where there's decentralized infrastructure, or two is you're going to build decentralized infrastructure around Bitcoin on top of Bitcoin, etc. Frankly, I think we should do both, right? And the market will decide who the winner is. I have my own personal opinions, but ultimately the experimentation and the pursuit of innovation is really important because nobody knows what the future holds. With that said, I think that there were some crucial assumptions and kind of foundational components of the smart contract platform thesis that not necessarily have been invalidated, but have absolutely evolved over time. And what I mean by that is, if you go back and you look at smart contract platforms in general, the reason why they were created was because it was very difficult to do smart contracts on top of Bitcoin. The composability in kind of an efficient, easy manner wasn't there. And so, with that said, now that's not necessarily the case. It's much easier to do that than it was in the past. And so it brings into question how important are the smart contract platforms if you can do similar stuff on top of Bitcoin. And the last thing I'll say that's also kind of tangentially related here is there's a lot of tribalism. There's a lot of belief that only Bitcoin wins, or Bitcoin's stupid and only something else wins. Actually, what you're starting to see is it's likely to be kind of a multi-chain world, but the different blockchains probably serve different purposes, right? It's a framework that I think a lot about is like monetary maximalism, but technology competition. And what I mean by that is everyone here is a monetary maximalist. If you live in the United States, you get paid in dollars, you save in dollars, you invest in dollar denominated assets, you pay your taxes in dollars. You are a fiat maximalist in US dollar terms. If you live in Mexico, you're also a maximalist, but you're a peso maximalist. Very few people in the world live and have multiple currencies that they denominate their wealth in. And so it's going to be no different in the kind of crypto world as well. But where the technology competition comes in is a lot of these blockchains, specifically around smart contract platforms, are competing for the highest throughput, the lowest fees, and kind of technical superiority. And frankly, I'm not smart enough to know who wins, who doesn't win. The market's going to decide that. And so if you build technology, then you probably want to be able to be somewhat flexible across the different ecosystems to ensure that ultimately your applications end up being successful. Yeah. So I don't know if there's much more to say than that.
Yeah, so I'm in agreement that it's not a zero-sum game, and the tribalism on any side of the fence that looks like there's one winner and a bunch of losers, I find to be quite naive. Edan, I'm curious, how do you see Lightning fitting into the concept of Bitcoin DeFi? Because it's playing a central part.
Yeah, so I think I actually want to address something that Anthony said with regards to that. So before you joined, Anthony, I was talking about how I view these smart contract platforms as competing with one another, but not really competing with Bitcoin. And you mentioned, we could build DeFi on and around Bitcoin, or we could try and build on these, on whatever platform in a multi-chain world and have Bitcoin be part of that. And I think that's true, but I think there's one crucial difference, and I'm interested in your thoughts on this. So I think what sets Bitcoin apart is that Bitcoin is designed for and has a community ethos around reliability. In other words, Bitcoin is going to be something that will be the same for you as it will be for your grandchildren, and around security and around scalability through layers, so that you end up with a highly scalable system without having to introduce these, various changes. Now, I think that we today think about DeFi. We look at DeFi. We think, DeFi is all of the things that we're seeing now. But this is really just the beginning. If we're truly decentralizing finance, the most important parts to decentralize are the most important parts of the financial world, right? So that the biggest parts of the financial world are things like pensions, bonds, long-dated bonds, real estate, gold. These are assets where people are holding them primarily for the purpose not of generating wealth, but of preserving wealth. I think finance is 95% wealth preservation and 5% of speculation and risk. And so I think that what sets building DeFi around Bitcoin apart, the reason we should be very interested in building on Bitcoin is because I think only Bitcoin has this property where if you want to make a long-term investment that you don't have to look at, that is primarily for the purpose of wealth preservation, which is basically the kind of thing that Michael Saylor is talking about, Bitcoin is the place to go. And if you want to use systems that are going to provide you with that same kind of long-term thinking and long-term ability to build and build security for yourself, you want to build on the most solid, stable foundations, which again I think is Bitcoin. Now you spend a lot of time talking to institutional investors, family offices, exactly the kind of people who are interested in wealth preservation. You talk to pension funds who are doing the same thing for everyone. I'm curious how you think about this particular point.
Yeah, I think that in many ways, both the proponents and critics of Bitcoin identify and reach consensus on one important aspect of Bitcoin, which is it doesn't change. And that doesn't mean it doesn't improve the technology, but the core features of Bitcoin around decentralization, the specific monetary policy, et cetera, those don't change. The critics look at that as a negative. They say it doesn't evolve, it doesn't improve, it's stupid, it doesn't do anything, whatever. The proponents say, no, that's the point, is that there's, certainty in the future. And I think that both of them are right to have identified this point. The difference in conclusion is driven because they're optimizing for two different things, right? There's a really unpopular perspective, especially in the crypto world, around decentralization doesn't matter for, I don't know, 90% of use cases, maybe 95% of use cases. Actually, centralization is superior than decentralization, right? If you think of the legacy world, almost everything is a centralized hierarchical structure. And when we figured out how to be efficient with the use of capital and resources, we were able to build multi-billion, if not multi-trillion-dollar companies. It's amazing, right? Amazon isn't Amazon if it's not centralized and hierarchical. And so we can't just dismiss decentralization or centralization, right? That there's a time and a place for it. Same thing goes with money or currency. The US dollar actually works pretty damn well for majority of people for what they need to do. But there's long-term systemic problems that people are now waking up to, understanding, etc. And there's this belief that there's only going to be one currency or there's only going to be one platform. And I just don't see that being the answer. What I do think is you have to ask, what are people optimizing for? And most Bitcoiners, not all, but most Bitcoiners are optimizing for preservation of capital, for certainty, for sovereignty, and for what I would just bucket as peace of mind. So they want to not have to worry about going and finding the new thing that may have 1,000x returns or 0x returns. Instead, it's the thing that has the highest probability of being around 100 years from now.
Yeah.
And so when you start to think about that, like that's really, really powerful.
I think so. The thing that blows my mind the most is white paper to nation state acceptance in 12 years. So you keep using the word they, and we talk about individuals, but we're actually at the level now where institutions and nations are taking advantage of Bitcoin's promises.
Well, I think we just forget, like, nation states are individuals and corporations are individuals as well, right? Like the entire thing ends up being these organizations are made up of people. And so naturally, if individuals want to do something, then the organizations and institutions will want to do those things too. And I think that's probably the biggest thing that people mistake is, if you're an individual today, and let's say that you are looking at how do I preserve the capital that I have, and you ultimately conclude Bitcoin is the best way to do it, that analysis is no different than a corporation, than a financial institution, or a nation state. They all conclude the same thing because it's still, how do I preserve capital? And sure, some of them have a little bit different goals, or they're optimizing for something slightly different. But if the ultimate goal is just preserve capital, regardless of how much money you have or in what structure, you're likely to end up with a very similar conclusion. And so when you start to see things like the country of El Salvador adopting this, well, what are they trying to accomplish? They're trying to accomplish the same thing that every individual Bitcoiner is trying to accomplish: sovereignty, protection of purchasing power, certainty of the future, etc. So I think that it takes a while to wrap your head around that, but once you get that, you're like, oh, of course, like they're all going to do it, right? Because it's no different of an analysis than the individuals that make up those organizations.
I think, one way to think about it is, we talk about scalability a lot in all kinds of ways. And there's sort of this obsession with transaction speed or, transaction cost. This is not, for a settlement layer like Bitcoin, it's entirely unclear that those are the things it should be optimizing for. There is one type of scalability that Bitcoin optimizes for very well, which is what you mentioned. It's sovereignty scalability. It's the ability to be scalable for sovereigns. So exactly like you pointed out, right? Countries, institutions, individuals, they're all looking for the same thing. They're looking to empower themselves to be autonomous, to own their destiny. You look at a country like El Salvador. El Salvador is a dollarized country, which exists in the orbit of the United States of America, like many countries do. And many countries over the last decades, and really forever, if they're smaller, if they aren't the superpower, have had to give up a great deal of sovereignty. But this is really accelerated in the way that the United States has weaponized the dollar through sanctions, through SWIFT, through the IMF, through World Bank. The fact that these organizations visited El Salvador is not a coincidence. It's due to the fact that that El Salvador doesn't have full sovereignty. And so introducing Bitcoin is a way for El Salvador, and now countries like Panama, Paraguay, and the Ukraine, who have also started the same initiative, to effectively take back control, to stay sovereign and to regain their sovereignty. And so sovereign scalability, that's an extremely powerful idea, and I think is provided only through the type of reliability and assurances that Bitcoin provides.
So I'm curious. Where does Sovryn itself, as a protocol and a platform, fit into that, and what's the opportunity for Sovryn in this landscape from both of your points of view?
Yeah. So what we're seeing in Bitcoin DeFi is remarkably different from what we're seeing in other types of DeFi. Everything that other types of DeFi do, the lending, the trading, the yield farming, you can find that, for example, in Sovryn. But where things become different is exactly the point where you integrate with the Lightning Network, which is now integrated with Walmart and McDonald's and every single coffee shop in El Salvador. It's the ability to then use submarine swaps to have people be able to transact in a Bitcoin-backed stablecoin and marry sort of like this country. El Salvador is like it couldn't have been more perfect. It's on the one hand a dollarized country, on the other hand a Bitcoin country. You marry the long-term assurances that Bitcoin provides and the sovereignty that Bitcoin provides with the ability to transact on a day-to-day basis with dollars. You combine those two things. How? By creating Bitcoin-backed stablecoins. And so, for example, Sovryn right now is doing two things in El Salvador. One is working on introducing the ability for people to turn their Bitcoin into dollars by creating Bitcoin-backed fiat, effectively, right? So competing with the Fed with their own sovereign currency, with their own sovereign wallet. And then the other thing is allowing borrowing and lending on the basis of their Bitcoin, which opens up the ability to borrow to a large number of people who aren't banked at all, right? So it's bankless lending. This is something that only Bitcoin can do. It's something that only Sovryn can do because of the fact that Bitcoin is appropriate to these to even on the nation state level. Today, for example, and this isn't just Sovryn, right? So Stacks is another Bitcoin DeFi platform. Today, the city of Miami started accepting a token called the Miami Coin, which is designed on Stacks, which is another Bitcoin layer 2 system, another part of the Bitcoin ecosystem. And again, you see a city, when it needs to decide what it is going to integrate, it chooses a platform that is a Bitcoin platform. And I think really it comes down to that type of reliability. So I think that's how we take DeFi from being a very, very self-referential system where, people are taking tokens that were generated on the system and trading them for other tokens that were on the system. Not even that many years ago, in the height of the ICO boom, I went to one of these cryptocurrency conferences. And what I saw around me was thousands of people who had decided, they wanted to make money like every single generation before them, but they decided to cut out the middleman. So you see some guy walking up to someone else and he says, "Hey, look, I've created money. Do you want some of my money?" And the other guy says to him, "Sure. How about I pay for your money with the money I made?" And so it's just people swapping their own money. And what we really need to do if we're going to have a true impact on the way people live is integrate these things, these really powerful property rights systems that we're building through Bitcoin and through smart contracts into people's everyday lives, into the real economy. And I think that is happening in many ways with Bitcoin, the currency, but also with Bitcoin DeFi.
Okay, so you're making a point about the shitcoin casino and 2017 ICO boom, and I understand that Sovryn is going to be launching the Origins platform, which will be a launch pad for other tokens. So I'd like you to explain how what Sovryn is doing with their launch pad is different than a shitcoin casino and a self-referential, fractal reiteration of what we had before.
Right. So one of the issues that I have is with this recent idea of Bitcoin maximalism, that the only token that can ever exist or should ever exist is Bitcoin. This was, I don't think, ever an idea in the early conception of Bitcoin. And indeed, the first times we started to tokenize things, we were doing it on Bitcoin. The first NFTs were created on Bitcoin, right? Rare Pepes have suddenly become popular again. They started the whole NFT idea.
Namecoin.
Yeah, well, so we've had exactly. So Namecoin was basically a version of ENS, a way of creating a DNS system with a blockchain. The difference really is whether or not what you're trying to do is create a competing money, and to be a sound money, I think you need to have something which is very much like Bitcoin, and we haven't seen something else like that emerge. However, tokenizing is a very, very powerful tool because it allows us to decentralize. So Sovryn has a token, which is the coordination token of the Sovryn ecosystem. It's called SOV, and it's used in many different ways. It's used for risk mitigation. It's used for the creation of sub-projects that govern themselves. But it's got one primary role, which is to allow people to participate in decentralized governance of the system, because it's not a money system. You actually want a system which is creating rules and creating different types of more nuanced property rights to be able to evolve and to create new things, right? The whole point is to be able to build new innovative ideas on top of Bitcoin. So you need to be able to coordinate around doing that kind of thing. But also, in order to incentivize people to do that, they need to be able to earn from it. And what do they earn? They earn Bitcoin, right? And so you can think about this as sort of, if we think about the idea of stock, right? Shares. It's a very old paper and pencil idea. It's really high time for us to upgrade. The big problem with stock is it's dependent on national governance. It's limited to the borders of the governments that enforce the stocks. and it is dependent on the whims of judges who are going to try and determine in long protracted court cases how things are supposed to happen. But worst of all, it falls under the purview of regulators like the SEC. And the problem with regulators is regulators, by definition, are always going to be against innovation, because regulators want to regulate, and innovation is all about irregulating. And so, so we're the irregulars, right? We're the irregulars in this war. And so if we want to be able to create a system of incentives where people can come together, build really, really big things, take a chance on things, you need to have that mechanism. And the best way to do that is by tokenizing. And so Sovryn has this SOV token, and it's basically, in its most simplistic conception, a stock which doesn't rely on any government. It relies on Bitcoin for its ultimate truth. It can't be stopped. It's permissionless, and it earns you not fiat, which can be, taxed or whittled or inflated away. It earns you Bitcoin. And so SOV was created with the goal of creating the Sovryn ecosystem, and has been a very, very powerful driver. I think it's why Sovryn has become sort of like the fastest growing new part of the Bitcoin ecosystem. And other projects are going to be interested in doing the same thing. So we've already seen a project launch on the Origins platform. So Origins platform is like the launch pad for these new projects, which is called Babelfish. And Babelfish creates a way to limit your exposure to the centralization of stablecoins by aggregating these stablecoins, creating an insurance program for them, and creating a way for you to basically deposit USDT, for example, or USDC, get a different dollar-denominated token which can't be blacklisted or can't be frozen because of KYC requirements. Origins itself is now turning into a sub-DAO, right? Its own community that want to take this idea further. There's a project called Zero that are introducing zero interest loans, so people can borrow against their Bitcoin and pay zero interest forever, because these loans are, perfectly collateralized. And so, if you want to pay your rent, you can do it by taking out a loan from yourself, effectively, from your own Bitcoin hodl. And not have to worry about whether or not you're going to be able to pay the interest rates, or whether these interest rates are going to be variable. And there's a project called, I think currently called Sovryn Mint, or the Sovryn Dollar, which is a Bitcoin-backed stablecoin project that is launching on Origins, as well as a number of wallets like, I don't know if I can mention them here, that are looking to launch, that will make it much, much easier to use Sovryn. And so an entire ecosystem that is incentivized is growing around Sovryn, using the Origins platform, and using it as a way to grow in an incentivized way the Bitcoin ecosystem. And some of these will succeed, some of them will fail, but the basic idea is none of them are creating a cryptocurrency. They're creating this new thing, which isn't quite a stock. It's like the next generation, of stocks, and allows you to earn Bitcoin for taking the risk.
So I'd like to bring Pomp into this discussion. I mean, we're looking at what's happening with BlockFi and their financial products. We look at Brian Anderson's recent discussion about problems with the SEC and regulation with centralized exchanges. How do you see this new generation of tokenization and stonks and equity developing and competing with the existing legacy systems, Pomp?
I think that it all is going to exist. Like I'm just not a believer in winner take all or zero sum games. So I think that there's going to continue to be centralized entities for a long period of time that do all sorts of financial services, both with fiat currencies and with digital currencies. And then I also think that there's going to be a ton of decentralized platforms as well. And really the reason why I think through that is there's always going to be somebody who wants the centralized services, right? There are still people today that don't have smartphones. They're few and they're far between, but there's people who don't have smartphones. And so I think that it's less about does something become extinct versus not. And then on top of that, I also think that we are in an age where this is a generational shift, and it'll take 20 years for the 20, 25-year-old kids who frankly are light years ahead of everybody else and understanding this stuff and embracing it and being kind of digitally native to really come into true wealth, right? Most kind of historical examples show that between the ages of like 40 and 50 is when people start to really kind of hit their stride in terms of wealth generation, et cetera. And so in order for that to happen, there's still going to be a lot of 30, 40, 50 year olds who aren't on the bleeding edge of innovation. I don't know, Coinbase today's got like 60 million registered users globally. Sounds like a big number. It's really not that big. There's 7+ billion people in the world. And so we got a long way to go. And so I think that there's still a pretty long runway for centralized services, but there's also a massive kind of market opportunity for the decentralized services. And I think that one of the pieces to me that's so interesting is technology is a barrier of growth because you need the technology, you need the infrastructure, you need the applications, all of that to be there. But probably the place where we've made the most progress is not from a technology standpoint over the last 3 or 4 years. A lot, not all, but a lot of technology that we've had in place today was in place during the 2017 bull run. The big kind of movement or progress we've made, in my opinion, is culturally. Every single mainstream media now has to talk about Bitcoin. Every corporation has to have a Bitcoin strategy. Every single financial institution is figuring out what is their Bitcoin or crypto strategy. Like we've made material progress in the kind of cultural or social elements, which I think is really important because it'll elicit more intellectual capital and financial capital into the industry, which will be a self-fulfilling prophecy because we'll make more progress technically, which will then lead to more adoption over time. And so I just tend to think that like we live in a world of abundance, and that world of abundance is going to have a lot of kind of technology tailwinds. And so all assets will be more valuable 10 years from now than they are today for the most part. And also, there are going to be multiple ways to win moving forward. And so if I was like a large financial institution, I'd keep my centralized business and I'd go start a whole new business in the decentralized world. And doing both is likely to going to be a winning strategy moving forward because the centralized world's not going anywhere either.
So I'd like to take the opportunity to get Shane Molidor from AscendEX, formerly BitMax, into the conversation. Shane, I see that you're as a listener. I've invited you to speak. I'd like you to, if you could accept the invitation.
Yes. So
Hey.
So AscendEX, are invested in Sovryn as part of a syndicate, which was led by Anthony, and they were one of the strategic partners that Pomp suggested to the community, and the community voted on. So it's really exciting to have you here, Shane.
So Shane, I still see you, just as I've given you a request. You have a request. You need to accept the request to join us as a speaker.
So I think maybe while we wait, I'll say just a couple of words around.
He's connecting now. Looks like.
Okay. So AscendEX is an exchange and is one of the
sorry about that delay.
Partners. Hey Shane.
Hey there. Sorry about that. Trouble navigating Twitter. Thanks so much for having me.
So, Yago, why don't you go ahead and continue with the introduction, and then we'll bring Shane into the conversation.
So Anthony was just talking about the fact that there's always going to be a place for centralized services. One of the reasons is that centralized services are familiar, and they can also move faster in many ways than a decentralized organization can. And so Sovryn has no ties right now to the centralized world, but it is starting to develop these ties, with banks in El Salvador, with other organizations. And one of the ways in which it hasn't sort of followed the regular roadmap of, the altcoin or cryptocurrency world is SOV has only existed in decentralized platforms and has traded on the Sovryn platform itself. Like, we eat our own dog food. But a number of exchanges have spoken about their interest in listing SOV. AscendEX might be one of them. And so I think there's a way in which Sovryn is starting to marry itself. And I think this is a very big opportunity to centralize services as well.
Yeah, I think, just speaking on AscendEX's behalf, we're thrilled to be aligned with the Sovryn team. I think, from our perspective as a centralized institution, it's our duty and obligation to give our users access to the most innovative projects out there. I would say AscendEX is chain agnostic. We've supported DeFi protocols on Ethereum, Polygon, on Solana. I think Sovryn is truly the first innovative and legitimate approach to bring DeFi to Bitcoin. That's really what attracted us early on. I think as a centralized exchange, there's a ton of value that we can provide the project. I think some obvious ones: facilitation of price discovery on a highly liquid venue. We service over 1 million institutional and retail users on the platform. I think that's a fantastic opportunity to really facilitate more robust price discovery. But then in other unique ways as well that I think AscendEX is really trying to differentiate itself. I think we've built out sort of a knack within the communities we service as kind of a bridge between DeFi and CeFi. We support over 70 assets on staking and DeFi yield farming protocols. So we're really kind of demystifying access to a lot of these new innovative protocols by allowing our users to interact directly with them through the safety and comfort from a centralized user interface. So again, really excited to be a strategic partner to the Sovryn team.
So Shane, do you want to? I'm curious. Like, what are you thinking in terms of some of the strategic ways in which you are looking on a ongoing basis to involve yourself with Bitcoin, DeFi, and the Sovryn in particular?
Yeah, absolutely. So I think first and foremost, with regards to Sovryn, listing SOV, as I mentioned, I think is probably one of the most obvious value adds. Just listing SOV on the Sovryn decentralized AMM protocol, I think restricts access. And I think that it's part of the evolution for the Sovryn ecosystem to start listing on centralized exchanges. I'm thrilled to be, amongst the first, and I think that there's probably much more exciting centralized exchanges to come in the future for you. I think some of the unique ways that we provide value are building access to, for example, lending and borrowing protocols directly from the platform, or allowing users to provide liquidity on the Sovryn decentralized exchange directly from the AscendEX GUI. These are things that we've already built out successfully for other DeFi protocols, and I think does make us unique among centralized players. Other ways that we could support are, being a launchpad or an initial centralized platform to list some of the projects that are going live via Origins. We've established this strategic relationship pretty early on, and I think that there's a ton of value in being able to funnel some of those early stage projects to a well-established centralized exchange.
So Anthony, there was a number of strategic partners in the round that Pomp led. Who are the other publicly known strategic partners that are centralized exchanges that we know about, Yago?
So there were a number of them. There's Gate.io, there's BitMEX, there's a couple who have decided to remain pseudonymous because organizations can want to be pseudonymous as well. I want to riff off something that Pomp said, right? He said that there's always going to be a space for centralized services. But I'm curious how big of the space that is. So I think one of the things that I'm excited about is the opportunity for hyper-Bitcoinization. I think what that means for me is that you have this ultimate settlement layer, you have this ultimate settlement mechanism, and it becomes the easiest way for decentralized and centralized players to play together. And Shane was saying that their front end, their GUI, can integrate with Sovryn and effectively use Sovryn as a backend. And I think that the really exciting opportunity with DeFi, the ultimate opportunity, is that you end up with Bitcoin and with Bitcoin DeFi becoming this backend for the entire system, right? So internet companies are kind of like just a GUI and a service that is wrapped around a single protocol, which is internet, or a single protocol stack, really, because the internet is many, many different protocols, just like Bitcoin is becoming many, many different protocols. And so, Anthony, I'd like to ask you, how do you see this playing out? Do you expect to see sort of a lot of the vertically integrated aspects of financial institutions being hollowed out and then becoming primarily a way to conveniently access a decentralized world?
Yeah, I think that there's so many different players, right? If you think of just in one single transaction, you have, let's say, a buyer, a seller, and then you have infrastructure. And in some cases, you have multiple players in that infrastructure. So you have the wallet providers, you have the exchange, the liquidity pools, all that type of stuff. And so I tend to think that decentralizing everything is not going to end up being the solution. But the most critical parts, especially where security and sovereignty are essential, those will be decentralized. And so, in a like truly decentralized the world type mentality, the investment firms would be fully decentralized. The wallets would be completely decentralized. The exchanges would be decentralized. The data providers that are used to make investment decisions are decentralized. The seller's investment firm is decentralized. The wallet is decentralized. Like there's so many different components there. And what I think people are going to end up finding out, it goes back to what we were talking about earlier. 90% of use cases, decentralization is actually really bad. It's inefficient. It isn't nearly as effective as having a centralized hierarchical structure. Now, with that said, take a base money like Bitcoin obviously needs to be decentralized, both from a security, sovereignty, and a certainty of the future standpoint. I do think that there is also going to be this idea of kind of coordinating resources in a less centralized manner. So, a great example is in a traditional hierarchical structure, everyone goes into the same office. There's a CEO. That CEO kind of decrees down to everyone else, here's what you're going to do. And you either listen or you get fired. Right. And there's multiple layers of kind of management. And it's what we think today as a corporation. Well, now all of a sudden, people don't go into an office. There's like remote work. And we give employees more autonomy over the decisions they make. And we give them tools and information and education and try our best to kind of empower them to do the right things and ultimately make progress against certain goals, et cetera. Is that a decentralized organization? No. Is it more decentralized than the traditional corporate structure? Of course. And so I do think the world is naturally heading to a place where technology makes it easier to do some of this. But I just don't see a full decentralization. And so what does that mean for financial institutions? Well, most financial institutions, take an example of what would be a good example? Take Millennium. All right. And anyone who's familiar with Millennium understands they basically have a bunch of capital that they end up raising. That capital is then given to all of these teams. Those teams are given a specific percentage of the capital, and then they have very strict parameters around it. And so, a parameter could be, hey, you are to invest using this strategy. If you go down in your book 2.5%, we take back 50% of the money. If we go down 5%, we take back another half. And then if you go down 7.5%, we take back all the money and you're fired. Right. So that's kind of strict parameters, but it's very much the capital is broken up into a bunch of small teams and everyone has a dedicated investment strategy. That's not a decentralized organization, but it sure isn't a fully centralized financial institution or kind of traditional asset management firm. And so I do think that we're going to kind of continue to get like this more dissipated structure. But true decentralization, right? Most people who enjoy Bitcoin, think about Bitcoin a lot, understand the technical architecture, would argue that other things in crypto that are arguing that they're decentralized are not actually decentralized. And so to get to true decentralization in a financial institution, it's going to be really hard for me to see how they can do that while still remaining regulatory and legally compliant, and being able to serve the needs of their shareholders or their investors, right? Like you get into this weird world where the centralized rules of a regulated business don't fit with what we think of as true decentralization. And so instead, what we're going to get is we're going to get people who borrow ideas or kind of mechanisms from decentralization, and they implement it to make their loosely centralized entity more effective. I see that happening. But if you said to me right now, how are we going to run a financial institution in a fully decentralized manner? I don't even know if anyone's been able to identify how to do it, let alone figured out how to actually build the technology and do it on an automated basis. Because that's ultimately where this is all headed. If you have a truly decentralized institution, it's a fully automated institution, and I think
So do
that's
you
the
see?
part that gets lost through all this.
So do you see us achieving a point where what's actually being audited is smart contracts and code as opposed to traditional bookkeeping?
Yeah, I mean, look, if you go back, right, and people forget this stuff. In 2017 or so, into 2018, I talked a lot about we're gonna digitize or tokenize every single asset. Every stock, bond, currency, commodity is gonna be digital. And whether that happens on Ethereum or Bitcoin, some other smart contract platform, etc., it doesn't matter, right? At the end of the day, because ultimately it's not about the kind of tribal battle that everyone wants to have. It's not about winning a Twitter argument. It's about being able to functionally have this stuff work in the manner that it's intended. And so the reason why I believe that's going to happen is take a regulator's seat today. If I am supposed to regulate, let's say, the equity markets, and I know that a Reg D offering cannot be transferred from an accredited investor to an unaccredited investor in the private market, right? Right now, if that happens, I have to spend a bunch of time, money, and energy to go figure out, one, that this happened, go identify who the two people were. I have to go then build a case and then go to court and literally prove that they're guilty. And I usually have to sue somebody to do it. It's completely reactive system. Instead, what is likely going to happen is that all of these assets are going to become digital stocks, bonds, currencies, and commodities, and they're going to operate in some sort of automated fashion. And that automated platform or service is going to have the rules written into the code. And if a accredited investor tries to transact with an unaccredited investor with a Reg D offering, the code will just not allow it. It'll just say, hey, this is a non-regulatory compliant transaction. You cannot execute this. And the question that people, I think, have to ask themselves is, do we need decentralization to do that? In some cases, maybe yes. In some cases, maybe no. But that's ultimately where we're kind of headed here, is if we're going to digitize money, truly digitize it, right? If you go back before the 1970s, 1980s, all assets were analog. They were physical in nature, physical paper money, physical deed to your home, physical stock certificate, etc. We then transitioned, and everyone talked about like the internet age. But the internet age, we don't have digital assets today. We have electronic QSIPs that are representations of the physical assets, and they're held in centralized databases. And so when a bank makes a transaction with another bank, they're not actually sending anything with true finality to the transaction. They settle up later. That's true of money. That's true of stocks. That's true of all these assets. What we're now getting, and Bitcoin was the first one, and now we're getting a whole bunch of them, is we're getting truly digital assets. Can be sent to anyone, anywhere with finality for very, very cheap cost. And so when you start to do that, what's the difference between Bitcoin, an NFT built on any platform, and a digital stocks, like a digital equity share? Well, actually, from a technology standpoint, if everything's built on top of Bitcoin, there's not a lot of difference, other than there's only 21 million of the specific information or data of Bitcoin, and then there is X number of the other assets. And so what you start to understand is like all we are talking about here, Bitcoin, what is Bitcoin at the end of the day? The easiest way to describe it to somebody is an automated central bank. That's it. There's no humans. It's an automated central bank. And that central bank happens to have special rules. It happens to have social consensus. It happens to be built in a way that no one can control it. All of the kind of bells and whistles that make it so special. But at the end of the day, it's an automated central bank.
So I
And
think I'm sorry, I didn't.
Well, I was just going to say, and then ultimately what we're going to get is we're going to get automation. What is decentralized finance? It's automation. That's all DeFi is. It's automated financial services. And not all automated financial services will be decentralized, but all decentralized financial services will be automated. And that I think is the beauty of this is we could not get the promise of automation until we digitize the assets. Because you can't use electronic QSIP assets in an automated world because they don't settle quick enough. And so now we've unlocked that and we're going to go build an automated future.
So the thing that's most interesting to me about Bitcoin early on, having looked at it, was that it's not exclusionary. And this issue of accredited, unaccredited investors, we see how it is with what happened with Wall Street Bets, taking on Wall Street and adjusting that. This non-exclusionary aspect of Bitcoin is, I think, the central premise. And institutions, legacy institutions, coming institutions, whatever form, anybody can participate in it and nobody can be excluded from it. The exclusion happens around the edges of where those other networks to come or existing intersect with Bitcoin.
Speaking of non-exclusionary, maybe this is a good opportunity to allow some people to ask questions.
Yeah, great. So I'm just going to go ahead and go through the first people that are on the list. Timothy, going to invite you up, and you'll have to accept the there we go. Unmute yourself. You need to unmute yourself, Timothy, to ask a question. So you're in the room now, Timothy, but you need to unmute.
So I think we should thank Anthony. I'm not sure he's able to stay much longer. I think Shane and I might be able to stay a little bit longer and answer a few questions. Anthony, you want to say some final words?
Listen, one, I appreciate you guys putting this together. And I always tell folks that don't listen to what I say, just watch what I do with the money. And obviously, putting quite a bit of capital behind this idea of bringing decentralized financial applications and infrastructure to Bitcoin is something that I believe in. I'm willing to financially bet on it, and I think we're onto something here. So, you guys keep up the great work. I appreciate everyone coming here, and talk to everyone soon.
Thanks very much.
So I've added busy.jpg and Andreas as speakers. Again, you guys will need to unmute yourselves if you would like to ask a question.
Yeah, I was actually hoping to ask Pomp a question about the automation, or, what he was saying about automation. But it seems that he left before I got a chance to ask him. If any of you can answer it. When he says automation, I mean, with the decentralization, I mean, a big part of that is going to be, I guess, you don't have the centralized organization making the decisions, but it's supposed to be everyone who's contributing to the ecosystem, right? So I just kind of wanted to see what exactly he meant by the automation there.
Well, I think what Pomp was referring to is the automation of conflict resolution, right? That's basically what commercial law is all about, right? So our entire legal system is thousands of years old in terms of its basic assumptions, right? It's like liberal arts law. It's literary law. It's written down by people as kind of like this long, complicated poem that you need to try and interpret if you're a judge and figure out who's right and who's wrong. Smart contracts are totally different. Smart contracts are binary. They have a 0 or a 1 as an outcome. They are highly specified. Computers are extremely stupid, and you have to be very, very precise in what instructions you give them, or they'll do a totally wrong thing. And it's a totally different way about thinking about law, right? So instead of having a system of law which is written like a poem and signed by the different parties, and then if anything goes wrong, you go to a judge and you try to spend, a lot of money on lawyers and a lot of time in court convincing the judge that they should interpret that poem the way you want them to interpret it. Instead, you think about how we want to resolve issues in advance. You write this down in a spec, in a highly specified way in code, and then the smart contract determines how things are going to work. And so if you look at like the simple case of borrowing or lending, then, I need to borrow a certain amount of money. The smart contract holds my collateral. If I don't pay the money back, the smart contract automatically takes my collateral and distributes it to the people who lent me the money, right? There's no court involved. And so millions, billions, trillions, an infinite amount of transactions and money can change hands without ever having to involve a human decision. The entire thing can be automated and made much, much simpler. And you can extend this idea far beyond that. One of the things that has just recently happened with Sovryn is a marriage contract was written on the Sovryn platform. And so people can come together, they can decide how they're going to hold their funds together, right, in a smart contract. And if they ever decide to get divorced, the smart contract can decide, okay, under these circumstances, the divorce is accepted, and these are how the funds are going to be distributed. And if you can hold your funds in Bitcoin and in in a Bitcoin-backed stablecoin or a fiat-backed stablecoin, and you can hold title to your house as an NFT, suddenly it becomes possible to, instead of having to put your children through years of excruciating divorce proceedings, have the entire thing automated. And I think this is such a huge leap in terms of the potential to improve people's lives, but also to improve commercial, corporate, and financial efficiency.
Thanks. Whipper, you're up next. One question.
Yeah, sure. Hey guys, how you doing? Great talk so far. I'm not really sure if this is like more of a comment or a question, but like I heard a lot of discussion around decentralization and automation. I guess for me the confusing thing is that like I guess what I'm trying to say is like I guess I was surprised because it sounded like well, when you're building DeFi on Bitcoin, I guess the reason for that is because your number one priority is decentralization, and I guess I was under the impression that that's the main point of all of this. And if there's a belief that, I don't know, Pomp was talking a little bit about automation and centralized entities, and I'm not really sure, but I guess for me, like, I guess the whole point of this was just, putting decentralization first. I'm curious, Yago, if you believe in that, like that's the number one priority, is it not?
I don't think decentralization is the number one priority even for Bitcoin. I think decentralization is a tool. We have decentralization not because decentralization is important, but because of what decentralization gives us. And what decentralization gives us is a vitocracy, right? What a vitocracy is that, any group of people, right? The people who run nodes, the people who hold Bitcoin, the miners can veto decisions, which mean that the system can't be manipulated by any given group. And that's what turns Bitcoin from software to permaware, to something which is going to be reliable forever. I think if you look at Sovryn is less of a vitocracy, but is still vastly more decentralized. And the reason it's decentralized and the reason it needs to remain decentralized is so that it is always permissionless. So anyone from around the world can always use it. Anyone can access it. It's credibly neutral, so that different banks can transact with smart contracts, and different companies and financial institutions can transact amongst themselves, and they know it's credibly neutral. And perhaps most importantly, it's censorship resistant. It's incorruptible. It can't, nobody can steal your funds. Nobody can stop your transactions without your permission. So I don't think of decentralization as a goal. I think of decentralization as a tool to achieve what we're trying to accomplish. What about you, Shane? How do you feel about it?
Yeah, I think you had some great commentary there. I think that a role of a centralized entity like an exchange can play in building decentralization is ease of access. Ease of access, user interface, user experience that the target demographic is familiar with. I think the reality a lot of the DeFi ecosystems that are being built out right now is that they're still a bit esoteric, right? We talk about Alice, Bob, and Carol that are kind of these cypherpunks, not your keys, not your crypto. But the reality is Alice, Bob, and Carol are still getting paid in US dollars or other fiat. They then want to send a wire deposit to a centralized exchange so they can speculate on these assets. When a platform like AscendEX or any other centralized entity plugs into a decentralized protocol, such as Decentralized Finance, we're providing ease of access and allowing more end users access to that underlying protocol. And I agree with you, is that decentralization isn't necessarily the goal, it's a tool. It's a tool that democratizes access to decision making.
Great. Let's give Andrea a chance to ask a question, and then we'll move on to Blackness and then Ross Nagu after Andrea.
Yeah, well, so before my question, I have a bit of an announcement here from Mintler. We just posted a draft SIP, Sovereign Improvement Proposal, detailing how we envision kind of partnering with the sovereign community. So for those who don't know, Mintler is a Bitcoin sidechain, sort of an alternative to RSK, but I wouldn't say necessarily a competitor. Time will tell which sidechain has advantages in what regards. But what we envision is for Sovryn to be available on more than one sidechain, and we plan to start that by making the sovereign community a large stakeholder in Mintler's governance. And so you can find out more about that in our draft SIP. Something that Anthony was talking about reminded me of one of Mintler's features, which is access control lists, which is actually a way to apply rule sets, whether it's limitations on which addresses can transact a token or amounts and frequency and any other rule, which would be one way to apply regulations on tokens and facilitate security token offerings, hypothetically making decentralized exchange for security tokens that's fully compliant possible, because you're transferring the burden of compliance from exchange to token issuer. So I think that's also something that's pretty exciting. And yeah, I wanted just to ask Yago about your thoughts about the potential for sovereignty to also have a DEX for security tokens using ACLs, maybe on Mintler.
So it's funny that you asked this, because right underneath my icon, I see the icon of Bruce Fenton, who I think today made an announcement around security tokens. So maybe we want to bring him up. First of all, it's very cool that you guys made a proposal to launch with Sovryn. I look forward to reading that proposal. I think in terms of security tokens, I think there's definitely the opportunity to have security tokens on a platform like Sovryn, because Sovryn, again, is neutral, and you can use Bitcoin secured smart contracts to create any type of legal structure that you want to use, and any type of regulation can be, a smart contract can be modified to take into account regulatory concerns. I wonder, Bruce, I'd be curious to hear your thoughts on how we merge this world of security tokens, where you have to deal with the SEC, with the decentralized permissionless world of Sovryn and Bitcoin.
Hey, how's it going? Good to see you.
Yeah, nice to see
yeah.
you, Bruce. Long time no chat, man.
Yeah, cool. Yeah, the interesting thing about securities, because they are, well, the best ways to think about securities, if you think about stock, which is we get caught up in this word security, but stock is a great thing because stock makes sense to everybody, hopefully, and stock is something we should have. We're going to want to have stock. Companies are a thing. Certain things are just not going to be decentralized. You're going to have some version of something like a Disneyland or a film or a hospital, or there's certain businesses that are going to be centralized, and there's certain assets like real estate that'll be centralized. So and that's a good idea. It's a great idea for an entrepreneur to say, hey, I have a better recipe for ice cream or a better way to make drones. Give me some money at this valuation, and they go become the next Google. It's perfect. Great economics. So you'd need those structures. Unfortunately, 88 years ago in the US and all over the rest of the world, they made these rules and defined these things as securities. And here's the trick: they're defined as securities. So it's not just stocks; it's all kinds of instruments, bonds, stocks, even lending instruments in the United States. All kinds of bills, investment contracts, basically anything where you're kind of. It's not just stock, but anything where you're sort of trading something of value that is based on the efforts of people is considered a security. So the bad news is the laws aren't going anywhere. They've been around for 88 years and they govern everything. They govern Apple, Google, Facebook, all these billion-dollar companies and banks and Mitsubishi and Citigroup and everything else. And part of it is good. I mean, you don't want a world where your friend makes that better ice cream recipe and then Microsoft buys them out for $1 billion and he says, no, sorry, your shares aren't worth anything. There's some even if it's voluntary, ideally it would be all voluntary, but there's some things about property rights and property protection, and shares, other securities are a piece of property. So you're going to want at least things like that says, hey, if you own your shares, you really own them, and so that's how the rules started, but now they've bloated into this big thing. So the bad news is they're here. The good news is, there's a lot of things that are not governed by the rules. There's a lot of things that you can build around it. So you can build like entirely new models like DEXs and DAOs. But like I said, there's still going to be some centralized things like companies like Disney or whatever. And what you can do with our technology through and it could be any token platform or sidechain, Bitcoin, whatever, you can make tokens that represent those shares, and then those can move around in a much easier way. Because the way shares move now, like Disney, Apple, and these guys, it's really complex and clunky, and it takes days and days. If you try and move your money from Schwab to Fidelity, it takes a week or two. But if it was a token on the Liquid network or whatever, you could do it in 10 minutes or 60 minutes, maybe 6 confirms or something. So that's the good news. And then also, as bad as the regulations are, not all the problems are regulation. A lot of them are like just logistics and clunkiness and decades of computer tech that's been built on each other. So blockchains and distributed ledgers and stuff will help with that. And I think securities will have to modernize if we're in a Bitcoin world where Bitcoin is money. That's sort of the philosophy we have behind our firm, Watchdog Capital, which is like, if Bitcoin is money, then the whole world changes. And you're not going to have a world where Gen Z is sitting there in 15 years moving money around in Bitcoin, and they're still dealing with like, oh, okay, I'm sending my Bitcoin because I want to buy some shares in this stock. And it's like, okay, well, 10 days to get that done. That's not going to work. Gen Z is not going to, the world just has to move on because this stuff is just built on decades old stuff. So that's the good news. I'm optimistic. I think it's super exciting.
I'm going to disagree with you on something. You earlier said that these rules, these organizations aren't going anywhere. And I think they're going much faster than most people expect. I think the entire structure that we've built is built on a bunch of assumptions, layers, like you say, many of which are becoming obsolete. I'll start with one that you mentioned, private property, right? So I think that the real innovation of Bitcoin is it created the first new kind of private property and property rights that have existed in the, ever, right? We invented property rights once. We protected them with violence, right? Either you protect them yourself or you get men with guns or swords to protect them for you. Maybe it's the government or the police or a private whatever. And now, for the first time, we have private property that is borderless and that isn't based on violence. Its security is based on cryptography. And because it's based on cryptography, it's equally available to all people, the poorest, the richest, the weakest, the strongest. So that's one pillar of our current system that has just gotten knocked out, right? There's a real credible alternative to it. The second part of our system was built in an age of industrialization, right? Big countries, and the way that we know them, where 40% of GDP is managed by the government, and you've got government health and government pensions and government schooling and government policing and government all the things. This is a very, very new idea, and it exists because we entered into an age where things were naturally centralized. You had centralized broadcasting, centralized printing, centralized railways, centralized large armies, right? You stopped having knights on horses, and you now needed to have millions and millions of people in trenches. And so everything got centralized around governments, including powers like those of the SEC or the Federal Reserve. This is a totally new idea. Like, it's maybe 200 years old. We don't live in an industrial age anymore, except maybe in the developing world. We live in a digital age. And in a digital age, we're living in a world of increasingly reduced centralization. Anyone can have their own blog. Everyone can have their own Twitter feed. Anyone can have their own Bitcoin. Anyone can access any smart contract if they've got internet. And so that's another pillar of our current system. And then the third pillar of our system was legitimacy. And wow, look around. Like, that's going very, very fast. And it's going because the other two pillars have gone. So I think we're going to see very, very remarkable change very, very quickly. We went from nothing to legal tender by a nation state in 12 years. Imagine what the next 12 years will bring. I think it's going to be way more than we expect.
I like it.
So I'd like to give
I hope so.
I'd like to give Blackness a chance to ask a question. Stay on though, Bruce. Okay.
Yes, thank you. I've really just appreciated the conversation, Sovryn, Yago, Bruce as well. I just wanted to talk a little bit about adoption and kind of like looking at the global pyramid, if you will. All of us, if you're in the US, are in that global 1%, right, of wealth. And with El Salvador in particular, it seems like, at least with my experience with Bitcoin and crypto, it seems like this is the first time it's being actively pushed, a little coercively, a little in a bit of a totalitarian manner, but being pushed to people closest to the bottom of the pyramid, right? So people, and I'm wondering, just regards to people, in the top 1%, if some of the core value props of Bitcoin and crypto to a larger extent don't necessarily resonate as easily. So is there like an orange pill template that y'all have found works with, I'll limit it to small business in the global 1%, like censorship resistance, kind of like a lot of these businesses are benefiting from dollar hegemony. So, and then when you take it to sort of the global bottom of the pyramid, some of those, being crushed by the dollar, sanctions, money manipulation, all of those things, censorship, all of those make sense to groups in that community. So, are we kind of burning resources on the top that could be better served by trying to go and recruit the bottom?
I'd like to speak to that, if I may. So I find this point of view to be incredibly Western, European, American, entitled, and colonialist. We've been piping out the, bank the unbanked narrative for 10 years, and I've always been a proponent of unbanking the banked. I've also thought that what's known as the global south or the third world are a number of countries that are unburdened by legacy infrastructure, and that development and acceptance was going to be coming out of those countries. And if you look around, the fact of the matter is that African countries have been using digital cash with SMSs for more than a decade. And from all of the people that I've spoken to who travel through those countries, it's literally not talked about even in crypto media to the level of actually how much acceptance and use is happening in those countries. And they are using it on a daily basis, and they understand it on a level of, in German we say, was the Bauern nicht kennt, frisst er nicht. which means what the farmer doesn't know, he doesn't eat. And that talks about just that sort of like base level understanding. What I've seen in those countries and traveling through them and talking to other people who have traveled through them discussing crypto is they understand it even faster than people from Western countries and from Northern countries. They understand it really at the base level. This is something that I can use, and they are using it. I don't think we're fully aware in Europe and America how much actual daily usage is happening in those countries.
I think, we have some numbers around this, right? So the country with the highest level of Bitcoin adoption is Nigeria. 34% of the population of Nigeria have used Bitcoin. Among young people, it's almost 100% of the population. Turkey, huge adoption. Philippines, huge adoption. And the reason...
Vietnam.
Yeah, Vietnam. I mean, El Salvador is sort of like a leading indicator, but it's not the only one. And when... in some of these countries, like Nigeria, politicians tried to ban Bitcoin. There are protests for Bitcoin, right? Before I was working on Sovryn, I was working in remittance, and we were using Bitcoin as a settlement mechanism to get funds from European immigrants to their families, and funds were being sent to Brazil and Korea and China and Zimbabwe and Nigeria and Kenya. And this was because their systems are failing them. They don't have strong protections of private property. They don't have strong protections of their monetary property. And so they need it more than anyone else. And as a result, for them, the usefulness is obvious. It is becoming more obvious in the West. Inflation, numbers came out today from the Fed, and there's some, the highest inflation that the US has seen in close to 40 years. And so Westerners are about to learn, get an education in what happens when the system degrades the private property rights of its system. But for other people in the world, that need is much more obvious, much more acute, much more immediate.
I'd like to give Hector a chance to ask a question. I see that you're Web3 blockchain logistics. You probably have some very interesting.
I'm one of the usual suspects.
Questions.
Thank you for the opportunity. First of all, I want to congratulate all the Sovryn team, Yago. I've been following closely what you guys are building. The composability of this thing on RSK on top of Bitcoin is something we've been wishing for since we started with the DexRay MVP. But this question is more for Bruce. Is he still on the call? Yes,
Yeah,
he's there. Yes. Yeah. So since we launched, this is a kind of a two-layer approach. We have a protocol, and on top of that, we have a marketplace. And we had to do that because for the protocol, we knew that we needed a token for several reasons, and we can discuss about that. But assume for a second that we need that token. Then we have now live transactions, millions of business-to-business transactions, and we haven't been able to launch a token on the protocol level. This is to integrate networks, freight networks, right? Imagine Uber, Freight, and these other companies, so they can connect to this decentralized protocol, exchange flows, capacity, and being able to transact without their customers moving to one network to the other. It's similar. It's like a common backend. And we've been waiting for 3 years, looking at every single possibility, two-token approach, security tokens, a lot of different things, with some legal, very right legal minds. And so far, we haven't been able to find an answer. We saw ShipChain being shut down by SEC. Now we're seeing SEC going after Coinbase and also, decentralized exchanges like Uniswap. And this level of uncertainty, even though we've been waiting and we raised and we got to a point where we really have a group of companies that are ready to use this thing, and we haven't been able to implement it. Everything is there. We just don't have a legal framework. So for Bruce, is there anything else or anything that you can suggest that we explore that we can bring this to the, because the regulatory environment being still vague after 4 years. We're now considering going to another jurisdiction we never wanted to do because our main customers are here. in the US, I see.
Yeah. Yeah, I hear you. I mean, tokens are legal, and you can do a legal fundraise if it's a security in the United States. The big discussions, most of the things have all been about whether it's a security or not. And that's where, Coinbase and pretty much every other thing has been. Most people went into this saying, being a security is a pain in the neck. I don't want to be a security. So they went to their lawyers and they say, how do I avoid securities law? And the lawyer said, strip out everything in the 33 Act definition. So make sure you don't pay dividends, make sure it's not equity, it's not a bond, it's not evidence of indebtedness, it's not a debenture, it's not a tradable note, it's not an investment contract defined by Howey, and blah, 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 blah. And then what do you end up with? Crap. That's what you end up with, because you've stripped out everything that makes it any good. Like, oh, you can have this thing, but you can't share any revenue, and you can't have any power, and you can't vote, and you can't have a treasury, and you can't have central control. You can't have people running the thing as a common enterprise. Well, what do you want to buy that for? That's just a gift certificate to a store nobody wants to shop at. In reality, what a really, really good structure is something like equity. So the problem in the US is that anything gray area, it's kind of like the guys in at the New Jersey gas stations, and they sell weed, and they say, this isn't weed, it's a herbal supplement, and they get arrested. It never, ever, ever works. Never. And that's kind of the way it is with a lot of the securities. Now people are much more sophisticated, and they say, this isn't a security, it's a utility. And they, in some cases, now I'm only talking about projects that are really securities. Some things really aren't securities. Ethereum is not a security. Bitcoin is definitely not a security. So not everything is a security. You can be truly decentralized, but a lot of people have tried to do this dance, and I think they were wrong in the first place to go to their lawyers and even ask that. Because if you're truly decentralized, just do what Charlie Lee did and just be decentralized. You don't need to talk to a lawyer at all. He shouldn't have even needed to talk to a lawyer, because he never even did a fundraise. For Litecoin. But the easier way, if your just goal is to raise money,
no, I wanted to
then just do it
clarify.
as a security.
I wanted to clarify that we don't need to raise money with the token. We need to distribute ownership of the backend to the actual user, so they have future economic rights if they decide to, or future governance rights.
So is it like a DAO or
Yes,
something then?
yes,
Or?
that's it.
Oh.
So we're not racing
All right.
with
Well,
it.
then that's different
Yeah.
then. All right.
Well, I
thought you were trying to raise
wanna
money.
monopolize the
Hector, I
conversation.
think Sovereign has a solution for you.
Oh,
Which
cool.
is
Go ahead.
Sovereign is a decentralized community. You don't need to create this token. Sovereign can create it for you. You don't be the issuer, right? Allow a
Okay.
decentralized community to be the issuer. And in that way, you remove yourself from this potential risk of being the issuer and distributor of a security. And one of the cool things about the Origin platform and Sovereign is it's designed to do exactly that. It's designed to have a pre-existing decentralized community able to birth token projects, able to birth other decentralized systems without there being a central issuer. And a number of projects who have significant legal teams or work with companies like KPMG or Deloitte have had conversations with us around how to do this with the Origins platform, where you basically write a SIP, request the Sovereign community to do this for you. And the result has been that these law firms, many
That
of them
makes sense.
very,
That
very
makes sense.
conservative. Yeah, very conservative law firms have been very, very excited by this idea because it allows them to save a lot of time writing reports or opinions.
Quick
So I
question on
suggest
that.
you reach out to me.
Can those tokens have, yeah, I will as soon as we're done here. Can those tokens eventually get in the hands of not accredited investors in the US for ownership of the backend? If we're not the issuer, right? That's a big question. But we'll follow up later. I just want to get the conversation going. Thank you very much, Bruce, for the input, and Yago, I'll follow up with you.
Hector, reach out to me on our Discord channel.
I will do that.
Okay, and we'll get you in line with what's
Thank
possible
you.
for you on Origins.
Bye.
Okay, great. I'd like to give Jip, he's been waiting for quite some time, a chance. Let me add him as a speaker. And Martin, you next two up.
I'm going to hop. It was great to see you guys.
All right, Bruce. Thanks for joining, man.
Thank you, Bruce.
Thank you.
All right, Chip, you need to unmute.
Oh, yes. Actually, I think I pressed it by mistake. I was just listening and learning. I'm kind of new to the space, but thank you, guys.
Okay, you can still take the opportunity to ask any question that you might have, having listened, to it on the spot.
Yeah, of course. I mean, my main question is, with regular banks, like, your Bank of America's, they seem like a threat to the Bitcoin and what it's trying to do. I know a lot of people that work for Bank of America and Wells Fargo, and they're panicking, in my opinion. And I don't know how, I bought some Bitcoin and just want to hear you guys' thoughts about, central banks and regular banks, and I guess anything around that.
Well,
No,
ahead,
please.
Well, I mean, it seems like we're winning pretty solidly. We used the white paper to nation state acceptance and 12-year thing, quite often. We look at institutions buying into Bitcoin. I don't know that they're so panicking. I think that most financial institutions are looking for a way to, still secure a toll function, a gatekeeping role, and to get in the middle of the flow of people moving crypto around. It's not so much that institutional banks are panicking. I think that central banks are the ones that are panicking. If you look at their policies and their statements, they don't really know what to do because the cat's out of the bag. And they're looking to compete with central bank digital currencies. And the reason that they're looking to do that is they recognize the surveillance capabilities of everything being on an open public ledger. I think that the coming conflict is going to be between, totally surveilled centralized currencies and with an increasingly private and secure public ledgers like Bitcoin, Monero, etc., Zcash. These things we're going to see much more development. People think that these things are going to remain static. Bitcoin's also not going to remain static. There's so much development going on in the privacy sector, with coin joins, with the work that Wasabi's doing, the work that others are doing in the space. So that's where I think that the competition is going to be happening. And you, Yago?
So banks existed before the central banks existed, and they will exist after the central banks cease to exist. Banks are in the business of trying to help people earn yield, and so they have a large customer base and will adapt. And I think that Bitcoin DeFi is so exciting because I think ultimately these banks are going to be looking to build on the most stable, reliable settlement mechanism, which is Bitcoin, and they're going to be looking to build on the layers that come on top of that, which is Bitcoin for DeFi, which includes Sovryn. I think that central banks are going to make that much easier. And the reason they're going to make it much easier is because at the same time as Bitcoin, crypto, and DeFi are becoming more attractive, the central banks are going to make their own money less attractive. They're going to try and introduce a cashless society. They're going to try and introduce, as Exiled was saying, money which is always surveilled, money where they can automatically tax you, money where they can automatically inflate your money away. And this is because governments see the world through the lens of a government. They see a problem and they want to try and control things more as the solution. And in so doing, they're going to make their money increasingly less attractive. And this is actually going to accelerate the process of adoption of Bitcoin and the entire crypto space.
Martin.
Yes, thank you. Thanks so much for this conversation. I have a question that refers back to an earlier stage of the conversation where Edan Yago was talking about what has been happening to Bitcoin, and part of that was developing a culture and getting clear on sort of the ethos of security and things like that. And that made me question a little bit about the concept of Bitcoin DeFi. And it's somehow a concept that I find very exciting, but also a concept that's not easy to sort of see exactly what it is. And it seems to me that it's going to be very important to sort of demarcate clearly what sets Bitcoin DeFi apart from non-Bitcoin DeFi. But it's not as if it's running on native Bitcoin. It's not as if it's simply sharing in the ethos of Bitcoin. It's not simply sort of easy on-ramp and off-ramp for Bitcoin users. It seems to involve all of that, but not, I'm not 100% sure whether I sort of, with that, sort of exhaust the concept of Bitcoin DeFi. So I was wondering whether I can invite you to say a bit more about what you think Bitcoin DeFi is.
I think that's a really, really great question. So one of the reasons I'm excited about Sovryn and have been contributing a lot to Sovryn is because I think what sets DeFi or decentralized financial systems built around Bitcoin apart from everything else is reliability. One is the reliability of the money, the central currency in the system. Bitcoin by far is the most reliable, maybe the only sound digital currency that exists. But it exists and it is so reliable because the Bitcoin system itself doesn't change. If you think about Solana, Solana today went down for the second time, right? Now it will get better in some ways, but it's going to get worse in some ways. Ethereum, for example, has gotten better in many ways, but it's getting worse in many ways. I think the move to proof of stake is going to introduce a way to re-centralize Ethereum. If you're a miner, you have to work all the time. You have to prove that you're spending money on mining rigs and electricity just to stay in the game. And so you're like a farmer. But if you are in a proof of stake system, you're like a landlord, right? You just have some money and you make more money on your money, and you're not proving that you're working. Everyone else is proving that they're working for you. This has very, very strong centralizing effects and introduces a door for corruption. And beyond that, you look at a system like Ethereum, because it is so complicated, it needs to evolve and change frequently through hard forks or through the move to Ethereum 2.0. And so while these systems have developed a huge number of innovations and have been a huge contributor to the this development of the crypto space, ultimately, when you want to build a sound financial system, you need to build on solid foundations that aren't going to shift over time, that that if you create a smart contract that holds your pension, it's going to be there for you in 40 years when you retire. And I think only Bitcoin provides that degree of certainty into the future.
Great. Jack.
Hey guys, how are you doing?
Starling, great.
Yeah, just two basic questions, I suppose. How is development on Sovryn funded long term, and how much funding is there going into the future?
So one of the reasons that Sovryn has a token at all is, and I think we can be completely unabashed about this, is because it provides a mechanism for funding the system. It provides a mechanism for people who want to be in, who believe in this mission and who believe in the opportunity to risk their capital and to earn against that capital in the future. And so that's something that the Sovryn community created for itself. And so the Sovryn protocol, instead of making money like a layer one system of transaction fees, it makes money off of the transactions that occur in it through the smart contracts. So when you're lending, there's an interest that is being paid. Most of that goes to the lender, but part of it goes to the Sovryn system, the Sovryn protocol. When a trade is made, part of that goes to the Sovryn protocol. And so the Sovryn protocol collects Bitcoin, most of which, in fact, right now, 100% of which is paid out to the participants in the Sovryn Bitocracy, but part of which will be maintained for the continued development of the Sovryn ecosystem. And so the reason I said it's like the next generation of what stock or share is. Shares were developed as a way for people to come together, take on very big projects, take a risk on something which can grow, and also
And insure them.
yes, and create a way for those systems to be self-sustaining. You know, the oldest company in the world is almost 800 years old. So for me, the way I think about Sovryn, and I think this is true for a lot of the people working on the Sovryn system, is they're not building something for today or for tomorrow, or at least not only for today and tomorrow, but they're building something that they want to know that their grandchildren can use, and is going to make the world more permissionless, make individuals more sovereign, and change the way that we structure our society in the long term.
So I'd like to take the opportunity. I see a number of other Sovryn contributors that are on the call. Sujan, the GIMP. I'd like to invite you guys up to talk about Sovryn from your perspective as a contributor. Yeah, so I'm going to invite you guys up to speak. You'll need to accept the invitations. Be great. Okay. Well then, we've been at it for an hour and 45 minutes. I guess that would be a good time to draw it to a close. Edan, do you have any final remarks about what's coming up on our September roadmap, what people can be expecting to see coming out from Sovryn rolling out this month?
Yeah, so I think there's some very exciting things happening. The Sovryn ecosystem and community is becoming even more decentralized as groups are now starting to form sub-protocols or sub-DAOs, which participate in the governance of Sovryn, but also create new and specific products. I think it's a new way of building collaboration between people in a scalable way. And so, you know, some of the key things that people are building is Zero, which is a way to take out loans against your Bitcoin without having to pay any interest rates, so zero interest rate loans. Bitcoin-backed stablecoins. The Origins platform is going to be is forming itself as its own sub-DAO. There's also a number of centralized exchanges that, for the first time, the SOB token is going to become available to, you know, a large number of people who haven't yet been exposed to Sovryn, and so I think that's going to massively increase the rate in which people become aware of the protocol and the adoption that it drives. And so there's a lot happening all the time with Sovryn, and it's grown remarkably fast and has become so complicated in terms of the number of people who are contributing to it that it's hard to keep up with everything that's happening. I think this is going to continue to accelerate. But I think, you know, we've had a long conversation here, and I'd like to thank everyone for joining us. But for me, the primary thing here is reliability, building on a system with solid foundations, something which is designed to make everyone more sovereign, not just today, but into the future as well. And so I'd like to thank everyone for joining us. I hope you guys take a look at Sovryn or are using Sovryn already. And in any event, let's all stay sovereign.
Great, thanks so much. That was an epic long comment, Edan. And thanks everybody for joining us, and see you guys online.